Silver Dave here. Stimulus has stalled before this weekend. We probably won't have a deal until next year because, let's face it, we have a week before they pass stimulus, and knowing Congress and Senate, they will never get anything done in a week. Well, maybe they might. Maybe we'll see stimulus, but it's very unlikely. Let's be pragmatic here. So, let's find out what happens to gold if we don't get stimulus. Most of my viewers are in the United States, and the price of gold is tied to the US dollar, which is also the world reserve currency. Most analysts working on pricing gold and all the gold news is based on a US perspective, right? Most of these analysts believe that stimulus will drive the price of gold upwards. I have a different approach. I believe that overall, gold doesn't need stimulus to drive it up. What will drive it up, will drive the price of gold up, is actually dollar weakness. That means that if the dollar just implodes, right? Most of my American viewers believe that, the dollar will implode because of quantitative easing. That is one reason that could cause the dollar to implode. But there are other reasons, like if the absolute US economy is destroyed because of the lack of stimulus and people not getting aid, and businesses are dying, they're not getting funding, they don't have the cash flow to survive the current pandemic, then the economy can go down the tank. And what happens then? Well, foreign investors pull out. So let's start off with the first perspective that, we need stimulus, and stimulus will devalue the currency and it will drive the price of gold up. Yes, that is true. That could happen. That is one driving factor for the price of gold. And I believe you look at this Kitco News article, that is sort of, we're not getting stimulus, so the price of gold stalls. Okay. But, if gold was so dependent on stimulus, actually gold will completely tank if we don't have stimulus, which is kind of what's about to happen maybe with the stock market. I'll touch a bit about that at the end of the video. But what really is also happening at the same time as there's a lack of stimulus is that, let me see, I have this article which talks from a UK perspective that how a weak dollar affects British businesses who have business in the United States, because those businesses, right, their costs are in British pounds. And right now the dollar is tanking, and the whole US market has gone down. It's not just that they're getting less sales, businesses less, but also whatever revenue they bring in the United States, it's going to have a pay cut. It's going to have I believe it's gone down almost 12%. So it's going to take an additional 12% pay cut for them because they have to convert it to pounds, and pounds are much stronger now compared to the dollar. There is one part where, there was QE1, but the dollar has continued to weaken even past that. So what I'm seeing more now is that, the underlying weakness of the economy is driving the weakness of the dollar further. And the weakness in the stock market, if it weakens even more and there's no stimulus, actually that could be a positive for gold because it will weaken the dollar so much that foreign investors will have to pull out of the US market. Was stock markets tanking, expensive bonds, and the weakening dollar, it compresses like foreign investments. And a lot of the United States having the world reserve currency and having basically the most heavily growth-oriented stock market over the last few decades, there's a lot of foreign investment in the U.S. stock market and U.S. assets. If those investors are pulling out and taking their income to their investments, they put it in other places, then that could be a problem. I think one of the things that this article, for example, I'll post a link to this article from Fidelity, and they're saying that, it's typically seen as a safe haven. However, because of the downward track, their international investors are looking for alternative investments. And amongst these alternative investments, of course, gold will be a beneficiary of the alternative investments, but also emerging markets such as South Korea, Taiwan, China. These countries have dealt with COVID better than Europe and the United States. So if you're an investor, you're looking for returns, they will put it into those currencies, into those countries whose currencies are currently getting stronger against the United States dollars. I always say that, investors are mercenaries. They will put their money towards where they can make the most money. So they will go to areas where there is growth. I'm not just saying this. I believe there is also news that, Morgan Stanley is shifting assets into Europe because of the UK. So another example where, because the UK is going off Brexit, they think that, they need to be within Europe. Anytime there's uncertainty, there's like a weakness in in the overall economy. You can see that examples. I'll post this article as an example of investors moving their assets out of places where they think there will be weaker economic growth. Investors seek return. Wherever there's a higher return, they will flow to that. They'll bring their cash and they'll flow to that area. Investors are not a nation. They are by definition nationless, and they will put their money, especially private investor banks and so on, they will put their money where there is the most return. And basically right now was a stronger Asian currencies, and potentially better economic outlook, they will put it into emerging markets. And okay, Japan's not an emerging market, but they could put it into Korea, China, Taiwan, and I think Thailand. Yeah, second thing I want to point out is a little bit that, the United States, right now, the economic situation is not so surprising. If you look at the stock market growth over the past few years, it's been incredible. But if you look at how a lot of it was done is by pretty much share buybacks, dividends increases, basically CEOs working on increasing the share price of a company. And a lot of it is done through debts. I think one of the best examples was Harley Davidson, who has seen insane share buybacks but traded it for debts. And if you look at, if you create a culture of bonuses and high-paying CEOs who are rewarded for bringing share prices up, rather than investing back into the business, over like a decade, if they do it for a decade, it will decrease productivity. It will decrease companies' ability to function correctly as a company rather than a pure investment vehicle, which destroys utility for the company. And basically, if you're a new investor and you come into the market, and right now you're buying a stock of X or Y company, Harley Davidson, let's say, then what are you buying? You're essentially buying a package of debt with very little revenue, and that could implode any moment. And a lot of the S&P 500 is made out of companies like these, and so is the Dow, so is the NASDAQ. The underlying fundamentals of a lot of the stock market, it's not there. In order to justify it, you have to have earnings, which doesn't exist at the moment. So what do I think is going to happen to gold? I honestly think that, even if we don't have a stimulus package and the economy weakens further, the stock market weakens further, gold will not go down. Gold might actually stay at a relatively like a flat level. Will it go up further when there's stimulus? Yes, it will go up further. Will it go up further, but less? Not negative, but it will go up, but less than if there was stimulus and a crash. See, the best scenario is that there is a market crash and there is basically a first round stimulus, but this stimulus is not enough to bring back the economy. but it's only enough to weaken the dollar. And then they have to do a second round of stimulus, which is enough to bring back the economy a little bit, but they will need to do a third round to completely shore up the whole economy. And by the time they do a third one, they go overboard. And that's when gold just completely shoots up because there's way too much cash flowing around. Do I think that overall economy will tank? No, I don't think the US economy will tank completely, at least not within the next 8 to 12 years. There's a few more years to go, but they will have to continue on the same path that is not great, print tons of money, issue a ton of debt, and basically like pillage, have CEOs and CEOs pillage their own companies for the benefit of paper holders, which it's a very, it's not a healthy way to function as businesses, especially if they have to generate value. In this case, the value generated is for the shareholders, not even for the clients of the business. So yeah, I don't think you need to worry too much about the current reversion, but I could be wrong. What do I know? I mean, I'm just some dude on YouTube talking about his ideas. But honestly, like if I look at what's happening in foreign markets and at different markets across the world, there's strengthening currencies. Investors are pulling out their investments from the United States, which is driving the markets down. You're like, yeah, but why is gold still going down? Gold really isn't moving down very much. You see, gold is moving down a little bit every time the market goes down and there's no stimulus. There's no stimulus news, the market starts going down. But when the market goes down at that point, people are actually buying dollars because they're selling shares and then they're taking dollars. And when they take dollars, it actually drives up the demand of dollars. By selling their shares. If they sell the shares for dollars, they're driving up the demand of dollars. So the dollar will go up slightly. But because of the overall weakness, nobody wants to hold dollars for the long term, because then it means that you would have to buy US assets to generate return, especially if the trend for the dollar is going downwards. Then what will investors do? Well, investors will most likely cycle out over the course of the next 2 or 3 days out of that dollar. And that's what I'm seeing. I'm seeing that, there's like the stock market is going down, US assets, valuations are going down. And then, there's a short-term strengthening of the dollar, and then gold is going down a little bit. And then afterwards, the next day I see that gold goes back a little bit and the dollar weakens a little bit and the market is sort of flat. And then I see that cycle continue over the course of a few days. Now you were saying that why don't they just sell everything immediately? Well, because they don't know. They don't know that maybe if stimulus comes before end of year and there is no crash, then they would have to buy back into the market at a more expensive rate. They would have to spend more money to buy back, and that isn't very attractive. So they're probably trimming positions. That's what most investors are doing right now. I think they're trimming positions to cut back a little bit on their losses, potential losses, and they are fidgety. So if any type of bad news happens, like stimulus doesn't pass before New Year's, there is the eviction moratorium, and then both Democrats and Republicans are waiting for the Georgia elections to finish to pass anything. Then I think that would be the worst case scenario for the economy, and we might see a stock market crash. But like I said, also, people working in government, because they cannot be charged with insider trading and they can decide economic policies, they have an inherent conflict of interest to actually make the market crash right now, buy up shares, buy up assets cheaper later on, then do stimulus and then shore up the dollar value of those assets. Basically, they're printing money and putting it in their own pockets. That's indirectly. They have this incentive, and there is research to prove that that is true. Like they are more likely to vote in a certain direction that benefits them financially. Anyways, to conclude, you shouldn't be too worried if there's no stimulus, especially if you're a stacker and you're stacking gold and silver. But it is better if we have stimulus. Any dip I see right now, any type of dip is a buying opportunity in terms of gold. I'm buying less silver because because silver is quite chunky to store. It's getting like heavy. I was thinking of ordering some before the end of the year. If I do see further silver weakness, like $20 silver, I'm gonna buy a lot of silver then. But if right now gold is like decently priced, and it's like on the dips, it's quite cheap. So I'm buying like gold on the dips, and it's working out quite well for me, at least in terms of what I'm buying. I'm also like adding money to my brokerage. So when there is a crash, actually I can buy up a few assets on the cheap, mainly in the data science and data analytics side, because I actually understand a little bit of what those companies are doing. And I think that's the next phase of the internet, for internet companies, not just purely like selling you clicks and making you buy social media, but actually trying to generate pure value from big data and data they've collected, especially non-structured data, such as your picture and so on. We're not very good at managing that type of information right now. And the companies that manage to crack it and provide the sort of general purpose, user-friendly programs that can allow you to manage non-structured data, such as photos, videos, especially videos, they will be at the forefront of of the next phase of the internet. Anyways, if you like the video, please subscribe, click the bell notification, like the video, helps me out a lot. And thank you for watching. Dave out.